The Rebel Capitalist Show.
Going back to your interview with Jack Schwager, I remember it actually had to be in the late 80s because you talked about the bubble in Japan that was brewing. And of course, hindsight's 2020, but that was just a magnificent call. And what really was amazing to me is you not only kind of called the bubble, but you were short the bubble. And then you also, I think you called the bottom too, because you're talking to Jack and you said, I don't know if it's going to go from 30 to 20. It may even go down to 12. And I don't have a chart in front of me, but it got close to 12. It pretty much stayed there. So that was a heck of a call. But
It did go to 12. I'm just going to, sometimes I get it right. It went to 7.
Okay.
It went to about 9, 8 or 9. In 2011, I started buying Japan, and then the tsunami hit. Well, tsunami's a disaster, but back to our earlier conversation, so stocks collapsed again. I was already buying. I couldn't believe how wonderful this was, so I started buying Japanese. It went to 7,000. So I started buying Japanese shares. Back to the point of when you see a disaster,
So
you
this was
should
after the
perk up.
crash.
Oh no, this was 2011.
Oh, okay.
This was 21 years after
Got
the
it.
collapse. No, it was many years later.
Okay, got it. So I wanted to go back to when you were talking with Jack and ask you when you saw, I mean, you were just adamant that it was a bubble. There was no doubt in your mind. And so I wanted to ask you what you saw that made you believe that it was a bubble, number one. And then if you see any similarities with the US market as of 2 or 3 months ago.
Well, there were all bubbles look the same, George. It doesn't matter where they are or when in history. In Japan, a golf club membership costs more than a condominium on Park Avenue. I mean, it was
Back in the late 80s.
Yeah. Everything skyrocketed. The Imperial Palace, where the emperor lives, that plot of land in Tokyo was theoretically worth more than the entire state of California. The property. These sound insane,
Right.
and they are. But this is what happens in bubbles, and people were telling you, "Oh, this is normal. You don't understand the Japanese. They're different from we are."
Right.
And I said, "They don't put their trousers on one leg at a time. What do you mean they're different?" It's going on and on about how the Japanese are different and you don't understand the mentality and blah, blah, blah.
And also, Jim, I'm sorry to cut you off, but I just want to make sure everyone understands the bulls back then were also saying that there were some accounting differences to why the multiples in Japan were actually justified. And so, because I think that nowadays we look back at that and say, wow, how could you not see that it was a bubble? But just like now, there were plenty of bull arguments for the market continuing to go up.
Every bubble in history, George, there are all these arguments about how it's different. Whether it's the account, it doesn't matter what it is. People will come up with reasons about why it's different. And nuts like me will sit and say, "Do you really believe that?" And you know what? They do. They really do believe that. Because everybody believes it, and that's one of the definitions of a bubble. Skeptics get hounded, laughed at, ridiculed. The U.S. market in December, January weren't that bad. It was not nearly as bad, but it certainly was a bubble. The U.S. market had been going up for 10 years. There at the last 3 months, as you know, it skyrocketed. It had a blow-off kind of thing. Everybody was convinced it was going to go on forever. Always something comes along to pop a bubble. Mm-hmm. This time it happened to be one of the reasons is this epidemic. I mean, you ask me, the reaction has been nuts, overblown and crazed, but who cares about what I think? The facts are, and I have to live with the facts. The facts are it's closed down the world.
Yeah. At what point would you consider the S&P cheap?
Well, it depends on what's happening in the world. I mean, if America's at war with Iran, it would have to be very cheap. Right. If it's just a collapse, a normal bear market collapse, with everybody giving up and panicking, that's another thing. That's a question I cannot answer. George, you should watch Rebel.
All right. No,
It's a
no problem.
program. You watch Rebel Capitalist, and you'll get the answer. Okay.
That's right. No problem. Okay, so let's go back to your days at Columbia and try to use this as more of an instructional question. And I know back then you would have your students look at charts. And I know you're not a big fan of technical analysis or anything like that, but you would have them look at charts and see anomalies. Going back to the 1800s, I think even further back than that, in different commodities and stocks and markets. And then you'd have them try to figure out why the anomaly took place and what could they have done to foresee it happening. So do you still think that's a good approach for someone that's trying to learn how to invest in today's day and age? Would you have them do the same type of thing?
I did not have them look at charts as chartists.
Right.
I had them look at the chart to get the historical perspective so
Mhm.
that they could see, oh, this stock or this whatever shot up at such and such a time. Why did it shoot up? Or what caused that? And how would you have figured it out? In fact, if you go back and look at cotton in 1861, cotton went from half a cent to $1 in
Right.
6 months. Now, you might know why
I
cotton went
don't.
from, well, the war between the states broke out
Oh, okay.
in 1861.
Okay.
The South fired on Fort Sumter. And so, given that a lot of cotton came from the southern
Oh,
states,
right.
the price of cotton went from half a cent to $1. Now, I was not long. I wish I'd been around for that move. Would have been a fantastic move for anybody who had the good sense to foresee what was coming.
Right.
And that's this kind of thing. I said, okay, guys, look it up and see what happened. Most people like you don't know why, but and now you understand why that happened. But there's always a reason that things happen, and if you can figure them out in advance, you'll make a lot of. We can all figure them out afterwards. That's easy. But that's the sort of thing I was trying to teach them to do. Okay, let's see what's happened. And the chart just shows you what happened.
Right.
Cotton went from half a cent to $1. Okay, now let's figure out why. It went from a half a cent to $1. You name it. University computer in the late '60s, anything with computing in the name
Right.
skyrocketed. So then you would look at these charts and figure out why, what was happening to cause this kind of action. That's what I was trying to teach him. I wasn't trying to teach him about charts. I was just using the chart as a historic record as a place to start.
Yeah, and just one quick question on top of that. Did you ever learn to play squash? 'Cause I know
I
that's
did
why you
grow
took the job.
I took the job. I played squash and tennis every day until my rotator cuff. I didn't know I had a rotator cuff. My rotator cuff went out, so I had to stop.
Right. Okay. Now, I know that when you were talking about the Japanese market, just going back to that speculation, that you were concerned and you didn't want to ride it all the way down to 12 or 7. I think you said you're going to get out around 20 because you thought the Japanese might pull some tricks to make it hard for you to cash in on the trade. So my question that might be more applicable to today, I know back in March when the S&P was hitting its lows because of the virus, there were a lot of talk about the market closing, in fact, for 3 months, 6 months. So if we start to go down again in the S&P, do you think something like that may happen, that you would be a little more hesitant to short the market because you might have problems cashing in on that?
Well, I'm not going to pick on any particular nation, but throughout history, countries have and exchanges have changed the rules
Right.
when things go along. And George, you have to remember the members are the most important. Forget the investing public. We got to take care of the members of the exchange first, and they change the rules. Or countries change, the government change the rules. Is this good? No, of course it's not good. Is it free market capitalism? No, it's not free market capitalism. Is it crony capitalism? Of course it is, but it happens. And if you're not aware that it can happen, you can get caught in trouble. So you should always be prepared that somebody might do something out of the blue that's not good for you. So you have to watch to see who is getting hurt and who is benefiting, and be ready, be prepared.